We think second quarter will be the bottom of earnings for SK Hynix. Memory prices in second quarter are expected to fall another 10 to 20%, although bit shipments will recover. But because ASPs are falling, we see some further downside to, to the company's profit in the second quarter. And after that, we expect a sequential recovery in earnings because we believe the production cuts that companies, memory suppliers have initiated are likely to become, to yield results. And we expect demand supply to become more balanced in the second half and beyond.
So in a sense, you're basically suggesting they're going to get a little bit of help from their friends over there at Samsung. But what of the demand outlook? Because obviously there's this expectation based off of that. I would assume that we could see a little bit of a pickup or recovery coming through in the second half of the year. Is there anything telling you in terms of channel checks or the like that is what is going to eventually play out?
Yes, demand for now actually has been very weak, but we expect a gradual recovery in the second half. Our checks suggest that memory inventories at major customers, they continue to decline. And by the end of this quarter, some of the customers will have very normalized level of inventory. Even those customers that are maintaining somewhat higher levels of inventory are doing so because they're worried about supply tightness in later half of this year and beyond. So we expect inventory restocking cycle from major PC OEMs, smartphone OEMs, and server customers to start from late second quarter and gradually pick up pace for the rest of the year.
So all of that sounds relatively bullish on that front when it does come to the likes of SK Hynix. But in terms of a downside case, is it purely on, even with, I suppose, some of the supply-demand fundamentals ameliorating the issues thereof, that it really is going to be the macro picture that then is a determinant of what comes next?
To an extent, yes, macro is very important, and that means the demand. And unfortunately, there is not very strong visibility, although companies and our channel checks suggest that customers having digested their memory or component inventories now are looking to build inventories. Also, because memory prices have fallen 60 to 65% from the peak, they think there might not be much downside left to the memory prices, and hence they want to start the inventory restocking process. But yeah, macro is important at the end of the day. But more importantly, because companies, the memory suppliers have implemented production cuts early this year and also in the second quarter and likely to be on as well. That is likely to bring the demand supply into balance later this year, and hence prices will stabilize. So of course, while demand is important, supply side has also reacted, and we expect a combination of these to help in better memory ASPs in the second half.